Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, traders and investors. Welcome to this Friday, February 17th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we are going to talk about this Unilever Kraft Heinz deal. We got a couple earnings and ratings still trickling in as well, but a lot to get to from our guests. We have three guests today, two of them at 8:15. Those are Jim Carroll and Paul Hubner. They work for Point Capital Management. They are an MLP firm, so get your MLP questions ready because we're going to talk about that with Jim and Paul. And then at 8:35, we're going to be joined by Andy Swan. He's the co-founder of Likefolio. That is a social sentiment company. He's going to talk about Garmin, Campbell's, who reported this morning, and the retail wars. So, Joel, how are we doing on this Friday? How is the market doing?
Not too good. We're trading in the red again. Oh no, major correction, down 6 1/4 from that 45.5 close. Looking at yesterday's low, that's the key level on the downside, 36.75. Coming back, we'll see what happens at unchanged. Crude, again, a little bit in the red, that $54 level looming large. Gold up $2, silver down a nickel. Dennis, how you doing this morning?
On mute.
I think
yeah, you're mute. Dennis, Spencer and I were talking.
You're fast, though. You went too quick, Joel. You usually take an extra minute there. So
well, because Spencer and I were talking, and we decided that since it's President's Day on Monday and you have a prime minister, you have to do the show on Monday by yourself.
We have family day.
No.
Because, like I said before,
Brent knew it.
Canada doesn't like it when the U.S. gets a holiday and they don't. So 5 or 10 years, I think it was about 5 years ago, we put in Family Day on President's Day. So now you don't always get the days off that we don't. So we get to have President's Day off as well, but it's called Family Day in Canada. So I get the day off too.
All right, so we'll have to cancel that sponsorship from Labatt's Beer, Canada Goose, and Pure Canadian Maple. Okay.
Yeah, the Canadian Maple and the sled dogs. Don't forget about the sled dogs.
All right, can we just hop right in here to this Unilever because DC has some calls here. Spencer, you got the news on that?
Yeah, I do. So yesterday, Kraft Heinz said they made a proposal to Unilever, merger proposal. Unilever said thanks, but no thanks.
So I'm trying to put, all the logic and, obviously logically thinking about this market is nearly, kind of almost pointless because the market just does whatever the hell it wants anyways. But why is Kraft up? Why is Unilever both trading up, when this comes out? Mondelez, I guess they were potentially getting left on the outside. They're trading down substantially here. They're down 5%. You've got Kellogg's trading down $2 in the pre-market. I mean, food stocks are everywhere on this news here this morning. And I'm trying, to logically think about it all. And Chad, help me out, if you can put the logic to this either. Sometimes the market just doesn't trade logically here, but so there's a potential deal that's going on behind the scenes. It's not happening here, but we're going to rally Kraft Heinz $5. We're going to rally Unilever here $5. We're going to sell off every other food stock. Does this make sense?
No, but neither does the market. Far as DC, I mean, I don't know what your target was when you bought those 45 calls. You do have, out to May, so you're giving yourself some time. I mean, what we've seen on a lot of these occasions, deal or no deal, you get an initial pop, and then
Isn't that a TV show?
And what'd you say?
Isn't that a TV show? Deal or no deal?
Let's make a deal.
No, you're right, Dennis.
I think there's a deal or no deal, isn't there?
Yeah, you're right. Yeah, you're right.
Okay. All right.
I digress once again. It's Friday, though. I'm allowed to. Friday before a long weekend.
Who was the host of Let's Make a Deal for many years?
Oh God, I used to watch the show.
We're talking deal or no deal. Is there? Okay, so was it Let's Make a Deal?
Yes,
there's a deal or no deal.
Two different. Yes, they both exist. You're both right.
What was the deal or no deal?
Not Merv.
It began with an M, though.
Yeah, I know.
It was a great.
Marv.
No. Chat, come on. Who is the host of Let's Make
Howie.
a Deal? Who?
That's deal or no deal. I'm talking deal or no deal. We're talking two different things. We got to get on the same page here, Joel.
Okay, we're talking.
You said deal or no deal. You didn't say let's make a deal.
Okay, let's make a
Howie,
deal.
Howie is.
We're talking about let's make a deal, and I don't.
Monty Hall.
That
Okay.
was yeah, that was Let's Make a Deal. And then Howard Mandel is the host of Deal or No Deal.
Okay. That we're
So we
real.
got it all straight now. So I'm glad we got that bias here, so we can now focus on the no deal of Unilever and KHC. And pick your poison here on Unilever too. You have two stocks actually. I love these ones, UN and UL. So both of those obviously trade in sync with each other here, and both of them are trading up 11% here in the pre-market on no deal.
Okay, so I think you know what Dennis's opinion here on this. You know
I'd
you
ring the
you
register.
got it.
I'd be
Yeah,
like ringing the register. Oh, I would have probably rang the register a point ago.
yeah, or half, or I mean, but she has or he or she DC1.
Give her a level though. Give her a level, Joel. There's got to
I
be a level in there.
market. No, you can't do market in. This is what I was looking at in UL.
Okay.
Okay, 48.16. That's your pre-market high for you. Or no, she's in UN or UL. She is in UN. So let me get the correct
Okay.
symbol up here. And I'll give you a number, one number only for Dennis. He doesn't like when I give too many numbers. And I think that's the all-time high. What's the all-time high? It
48
is
bucks.
all-time high in UN comes in, was made just a few months ago at 46, 48 even. So if
Yeah,
I'm really,
48 even.
yep. So hey, hold on. Where is it at? It's at well, it's below
46
that.
and a half. The other one though, UL is 47.30. So confusing when they have two tickers. But anyways, UN, I agree with you, Joel. You're getting a big pop here. I'd probably ring the register if it got up to there. But who knows? This is an irrational market, and stocks seem to just go wherever the hell they want to go.
All right. There's someone. Someone has their foot on this thing at 47.20 over the last three 15-minute brackets. That's been a high. So maybe join that seller at 47.20. If it takes it out, all-time high 48 even.
And so on this news, Kraft Heinz, we're going to give you a one number for all these stocks. Kraft Heinz trading up substantially in the pre-market because there's no deal. Makes a lot of sense. Stock up 4 points. Here's a big move for KHC. The stock got, beats here just in the last, just yesterday actually, on their disappointing earnings report. So now they're getting it all back because they're not making a deal with Unilever. That makes no sense to me, but again, I can't put logic to this market. This is the no logic market. So looking at it, 41.30, I mean, I'd be saying, hey, as a lot of people probably got hit yesterday, it's right back up there again. I'd ring the register on this too, but I don't know if I'd be right.
91.30, that was the all-time high for 2 days ago. I'm sure a lot of people are waking up and saying hallelujah that this is back in the 90 handle. We'll see what happens. Keep an eye on the pre-market high is a little over 92, but I'm keeping an eye on the former all-time high at, what is all-time high here? It was made this month at 91.30.
You're right there. You're trading through it right now. So this is actually a new all-time high on no deal. And on no deal, we've got Kellogg's trade down $2. We've got Mondelez getting hit the worst. I guess because Mondelez getting left right out in the cold. MDL Zebra wanted to join up with somebody there along the way. Had been trying in the past and to no avail. I think it was Hershey's was sniffing around. We've had all kinds of interest here. Mondelez trade down 5% in the pre-market. Big hit yesterday. I think off the Kellogg or off the Kraft Heinz numbers there, support Mondelez getting hit again here because they are no deal.
It doesn't make much sense.
Joel, I'm trying to make sense
I
of all
know.
this. I'm sure there's an analyst out there that will write a report and that it will then make sense. But either way, I think a lot of times the market doesn't make sense, and analysts just write up some type of theory that kind of sounds like it's good. They're always trying. Even the media. I mean, so many times you have a move that's really doesn't make any sense at all, and the media will find the way to justify the move, even though it doesn't make any sense.
All right, Bob Wire.
What about Hershey's? What's Hershey's doing? That's
Uh,
just sitting there. So Hershey's isn't doing anything this morning. So that doesn't make any sense to me either. Conagra's offered down. Kellogg's getting killed. Just looking through any of your other food stocks.
What about General Mills? Because they also just cut their outlook like a few minutes ago.
Beats.
Like 10 minutes
Beats. GIS is down. They cut their outlook today?
ago. Like 10 minutes ago, 15 minutes ago.
Okay, well that's probably what's hitting the other food stocks too. Okay, so General Mills. So there's a reason, I guess. I missed the General Mills because it was just 10 minutes ago. So, okay, so you got GIS trade down 4%. So maybe the guidance is what's hitting the other food stocks here too, but all kinds of fun stuff happening in the food stocks today. Who would have thought you come in here on the Friday and the food stocks were going to be the wild sector?
Actually, me, because when I was making up the docket for the show yesterday, I saw that someone was reporting, that Campbell's was reporting.
Yeah, what Campbell's have to say? Have we got
Do we got?
or?
Yeah, we got him.
Holy
Q2.
cow, so much food news. I can't handle all this.
Oh,
Okay, what'd the soup maker say?
and Smuckers too. So Campbell's
Fuckers too. It's food day here on Friday. Option expiration, but it's really food day here on pre-market prep. Okay, give us Campbell's and then Smuckers.
Q2 adjusted EPS 91 cents versus 88 cents. Revenue 2.17 billion versus 2.22. So they beat on the EPS. They missed on the revs. They see their fiscal year 17 EPS pretty much in line.
Stock down 50 cents, offered down though, Joel, at 62.05, and there's no takers there, and the best bid's way down at $60.61. So that's telling me this thing probably wants to at least get into the 61 handle. So I'm saying lower than 62.05.
I'll give you one number here: 61.05. January 13th low.
But again, they're all wild. So, and then give us the Smuckers numbers. SJM. No trades here today, but I can tell you right now, actually there is. 134 just trade some odd lots there. It's offered at 134 too, which is down 4 points. So looks like to me a bad day for every food stock except Kraft Heinz.
Q3 adjusted EPS $2. That's in line. Sales 1.879 billion versus 1.92. So a slight miss there. They did cut some guidance, however. They cut their fiscal year adjusted EPS. Kind of significantly, I would say. It was $7.60 to $7.75. That was the original range. Now it's $7.60 to $7.70. So.
Well, and we know my algorithm. Guidance is more important than current earnings. I don't know if we've got to put something with failed mergers in there too, but I'll have to think about that one. But in any regard here, when you cut your guidance, usually you get hit, and SJM is traded down 4 points in the pre-market, and it's offered down at 134, so it's telling me it wants to go lower.
And I would have told you up until today, if you had a chance to hit this thing going through 137. Look at that. 1, 2, 3, 4, 7 lows in a row at the 137 area. So if we ever get back to there, that's going to be some major resistance. Looking on the downside, I know this thing can really move off a report. Trio lows at the 133 area, 275 to 3 even. I'd keep an eye on that, and then the lower 132 handle. But I'm sure there'll be a lot of movement in this today.
Sticking with the food stock theme, the company that makes the machinery for the farmers who grow the food, Deere, they also reported to DE, trading up in the pre-markets, up $4. This actually probably is kicking around a new all-time high, or it's close to it. Spencer, let's talk to us about the earnings, and then Joe will talk to you about the levels.
Yeah, that'll happen when you report Q1 EPS of 61 cents versus 54 cents, and sales of 5.625 billion versus 4.67 billion. So they beat
big sales.
They beat nicely on both.
They're selling some farming equipment there. So my dad's talking about buying one of those little John Deere. Just a smaller machine there, just to do his driveway. He's got a really long driveway, so that's another potential sale for John Deere next quarter.
13 and a quarter pre-market high, trading at the high of the session, taking out the former all-time high at 112.18. But folks, look at that. I mean, if you're trading the Deere, Dennis, you want to see a stock that looks itchy. What do you think about Caterpillar here? 4 highs. Yeah. Is there
the cat.
Is there a big seller
on the prowl?
The only thing that wouldn't make me really get too excited about that is, you know me, the spoos are down 7, so like I can't own anything. So that would be the only thing. But a seller's been there for 4 days in a row. Before we go to our first break, Bob Wire, I don't know if when he got involved in this Procter and Gamble. It really held up that day nicely when the news actually came out. But it looks like we have a little double top there. So
yeah, those have been working.
Yeah, so when you're talking about something to lean on here, there's a seller in the lower 91 handle, 91.15. Your high on Wednesday, 91.12. Your high yesterday, 91.12. Also the closing high of the move under 90 or under that 89.81 low. Look out, 88.22 fills the gap. So, all right, we're going to switch gears here, and we're going to bring on our first guest of the day, and we're going to talk about MLPs. Jim Carroll Managing Director and Co-Portfolio Manager at Point Capital Management. And Paul Hubner, he's the Managing Member and Portfolio Manager. So Spencer's going to talk MLPs with these two gentlemen. We'll be right back. Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, who's trying to locate our guest here on a conference line, so they'll be with us shortly. Meanwhile, we're going to pick up right where we left off. And Dennis, where did we leave off?
We're leaving off in earnings land here. So we were talking Deere. Let's go talk VF Corp. Full disclosure, I'm in short VF Corp here right now, but it's starting to look like I may be itching to cover here. But VFC trading down in the pre-market. They reported disappointing earnings, but it wasn't that disappointing. So, you don't expect much from the retailers. 97 cents versus 97 cents is in line. 3.3 billion versus 3.44 billion. A little bit of a soft outlook as well, but that being said, stock is holding up fairly well. We know last time Ralph Lauren reported it was just a disaster, and he saw RL fall almost $13 on their earnings report. VF Corp just kind of hanging out here in the pre-markets, down 3% or 2.5%, but not down much.
All right. Well, Dennis, you should put some bids out here at 48.05.
Okay, stopping you for a second. One reason I don't like putting my bids out there is we're still kind of trying to discover price. And I still say, even though I want to own the stock, when I put my bid out there, sometimes they push the price away from me. So I'd rather either, use a discretionary order and put an order really low. So a discretionary order is an order that has discretion on it. So for example, if I wanted to buy it at 48, I could put a $47 discretionary order and put $1 worth of discretion on it, so that if it goes off at a 48, I'd buy it. But I agree with you. I think I would like to buy 48. Not sure it's going to come in that far, though. It's not really going down anymore. So it's been kind of leaking a little bit since the report here, but it's kind of stabilizing here now in the mid 48s. And I think a lot of people are going to look at that and say, yeah, $48 might be good. Now, a lot of wild things can happen when the real liquidity comes in at 9:30. It's still very early. Only 8,700 shares have traded here, so still in the price discovery phase. But when I'm short of stock, I don't like bidding it because I feel like, you're stabilizing it yourself, and then you might push the price away from where you actually want to buy it.
Okay, let me take the other side of that, though. You're probably not the only person that's going to put a bid out there today, right?
But your bid.
But so let me finish. So if you go 47 bid, okay, low ball, buck before you want, and someone goes 48 bid for 5,000, then you have price discovery there. You know someone's gonna be aggressive at 48, so you have something to look at. So two sides of the coin. I don't think you're gonna get hit at 47. I'm just looking at the charts, 48.05, 48.18.
But when I was saying 47, I was really trying to buy 48. So
exactly.
I'm talking about discretionary order.
You
just
go 47 bid, it's going to go 48 bid. I'm just telling you what's going to happen.
The one thing, this is just a lesson that I want to teach people, though, is when you're trying to actually buy a stock out there, when you're bidding for the stock in this market, and especially this early in the pre-market after an earnings report, you're pushing the stock away from you. I always like to take liquidity. I don't like to show my hand, for one thing, because I don't like to divulge that information in the market, even though I just told everybody on a radio show. But, typically I don't like to show my hand. And then, second thing is I really believe, and you see it all the time, even, at the open. When you bid for something, sometimes there's an algorithm that steps ahead of you right away. You're adding that stabilizing thing. And if you want to buy it, you're not helping your cause by putting bids and then maybe jumping your own bids, and you're actually creating demand here for a stock you're trying to buy. So you don't want to push the price away from you. So you have to be very careful with, placing bids when price discovery is still happening. That's why I like to place them lower and use discretion. Because, and that's just simply, a discretionary order is just exactly that. It's an order that has discretion on it. So if I put a 46 order, put $2 worth of discretion on it, that means anytime the stock goes off at 48, it will automatically lift the offer. A lot of your retail brokers offer that type of order as well. So, it's an order that I use a lot. And that's because I don't want to be in the inside market, because there's so many market participants, especially high frequency traders, that will jump ahead of your orders and, try to move the price away from you. So that's why I don't like to just throw my bids out there randomly.
All right. Very good. Thank you, Dennis. You're the one with the experience. Bob Wire is sticking with that Anne-Marie call, getting long in a 106 handle.
What stock?
NVIDIA.
Joel moves fast. You got to keep up with them.
105.66 trading down in the pre-market. Man, oh man, that's been the recent low since the earnings. So I think I'd cut out there under 105.50. But Good luck with that one. S&Ps are down 8.25 at 37.25. 36.50 is the low. That matches Thursday's low. So we know what level we got to hold here on the downside off the open.
Obviously, if you're trading NVIDIA, keep an eye on AMD too. Those two stocks are starting to move a little bit more in sync together again. They diverged from each other a little bit, but it seems like NVIDIA and AMD both, do move together. So I do, there's a lot of people who are pair trading those two stocks together right now. A couple other stocks that did report
actually,
here.
I think I got Jim and Paul.
We got the MLPs?
Yeah, we got the MLP guys. So let's take a quick break, and we'll get them right back on in like 30 seconds. So
Okay.
Welcome back, traders and investors, to Benzinger's Pre-Market Prep. We're on the line with Jim Carroll, Managing Director and Co-Portfolio Manager at Point Capital Management, and Paul Hubner, Managing Member and Portfolio Manager at Point Capital Management. Gentlemen, thank you so much for joining us this morning. I want to get right into it. You guys do MLPs, so I want to ask you about the MLP landscape. It's been about a year since you were last on this show. So how has the rally in oil in the last year changed the landscape for you guys?
Excuse me. Good morning, everybody. So our last call was February 5th, 2016, and since then, West Texas Intermediate, the commonly traded U.S.-based crude oil, is up about 72%. That has put a very strong floor underneath stock prices for MLPs. The Alerian MLP index is up about 51% over that time period. So, but I might add, higher natural gas prices have helped. Natural gas prices are up about 42% over the same period. And during the early stages of an oil market recovery, such as what we've seen in the past 12 months, all energy stocks typically have a pretty high correlation to moving with the price of hydrocarbons, especially crude oil. So the answer to your question is, it's really been a big impetus to dramatic performance gains in MLPs.
What about the new administration? How do you see Donald Trump and his policies potentially affecting the MLP market?
One of his priorities is to reduce regulatory burdens, and there in the past 10 years, the regulatory burden on MLP infrastructure development has been substantially increased. Since he has taken over, we have seen positive steps with both the Dakota Access Pipeline in North Dakota and the Keystone Pipeline further west being fast-tracked now for permitting approval. In addition, I think, and this is probably even more important than the regulatory reduction, if you look at some of his key picks for cabinet posts, Rex Tillerson, the former CEO of Exxon, is now the Secretary of State. Rick Pruitt is the head of the EPA, and Rick Perry, former governor of the state of Texas, is the energy secretary. This three group that I mentioned, is the most pro-infrastructure development for the U.S. that we have seen in probably 3 or 4 decades. So it is, these people get the energy industry. They know what we have to do to become energy independent. And this is probably one of the biggest positives. I don't think it's quite yet fully reflected in stock prices of the group, partly because obviously they've just taken their jobs. So this has been a multiple compressor, that is regulatory issues for the MLP group. It has pushed down the valuations of the group because risks are higher that some project could be delayed or shut down altogether, and it is slowly being removed. Big positive.
Question from our chat. Can you address AMLP and KMI? Also, is KMI still an MLP?
KMI is no longer an
right,
MLP.
That's what I thought.
And it was one of the issues that has really helped the group in the past year has been simplification of corporate structures. What KMI did is they were forced to pay down debt. They were forced to improve their coverage ratios, and they also got rid of the whole IDR issue, which is incentive distribution rights. There was an issue for unit holders. It's a complicated story, but getting rid of that was good. In order to do that, they had to become a C Corp. So they are a C Corp. They have, and since they made that transition, the stock has done really well.
So, and then can you address AMLP?
Well, it's the Alerian ETF. There are pluses and minuses to owning the Alerian ETF. The biggest plus is you get some diversification through the whole group. The negatives, though, are that it is dominated by three names that make up probably 25% of the index. And should something go awry with any of those names, they're ETE, EPD, these are huge weights in that index, you're going to find yourself really underperforming MLPs. The index is very concentrated in a few names. It's also pretty expensive to buy. I mean, the ETFs are not 9 or 10 basis points to buy. So this is one of the reasons we run a fully diversified strategy where position sizes are smaller. You get more diversification, and it allows you to kind of step away and reduce some of the risk involved. The management fees are 85 basis points. Have you ever heard of an ETF that high?
No. I want actually, sticking along the lines of corporate realignment, and talked about Kinder Morgan. There have been some other big corporate realignments so far this year. WMB and WPZ, OKE and OKS, to name a couple. Do those impact the MLP market at all?
Absolutely, they do. So, if you want to go into some of the positives that are going forward here, we haven't really talked about the oil market, but that's one. The second thing we also mentioned, which is regulatory relief, but the third one is what I call restructurings and simplifications. KMI actually started this process, but you mentioned Williams and WPZ, but we've seen Enbridge and Spectre merge. We've seen Plains All American go through a similar process. What happened was the corporate structure of these MLPs got a little Byzantine. They were very complex, notably WMB and WPZ. So what this process does is it reduces debt, it improves distribution coverage, and it eliminates IDRs, which has been a major contention among unit holders. Without exception, when this process happens for the names that you mentioned and I mentioned, we have seen huge rallies in these stocks. KMI, for example, once they announced this reorg and did the distribution cut, the stock is up 80% since then. And in the case of Williams and Plains, they've seen even stronger rallies, virtually doubling from their lows. Now, there were some other tailwinds behind them while this was going on, notably the oil market getting better. But this is one of the big things that's happened in the downturn. Corporations have figured out that they got to improve their act. They can't have these Byzantine structures. Investors don't like IDRs, and they're slowly moving towards much more transparent, much more easy to understand business model. In many cases, this is meaning that this industry is moving towards C corps, which would attract a lot more institutional investors.
Gotcha. So, excuse me. So what MLP stocks do you see as having like the largest opportunity coming into this year, maybe through the end of the year, or on your shortest or longest time horizon? Which stocks do you see the biggest opportunity in?
So we run a portfolio of 25 stocks or so in this space, and I can tell you that we look for companies that have some consistent characteristics. The first is that their total debt to total debt to EBITDA is less than 4 times. That number, companies that had numbers higher than that got into trouble last time. So that's one of the things we look at. We look at distribution coverage that's above 1.1 or higher. We look at distribution growth that can be at 4 or 5% at a minimum going forward. So they have growth characteristics. And then lastly, we look for valuation that is below historical averages. And so if you look at our portfolio, I think examples of stocks like that would be MPLX, which is the downstream company, that it's the MLP of Marathon Petroleum, MPC. That fits a lot of those characteristics that I just took you through. Others that we like include ETE, which has some of those same characteristics that we've talked about before, and I think both of those are decent examples. Cone Midstream and Rice are two others that are focused on the Marcellus and the Utica, which are gas formations in the east that should benefit from the development of infrastructure to move natural gas from Appalachia to the Northeast. So that's a couple others.
Jim, actually,
Shell is SXLP, very high quality company, very cheap.
I want to ask you a couple more and we'll let you go. Interest rates, how do you see that impacting the MLP market this year?
Okay, so the yield on the Alerian is 6.7% right now, okay? And compared to the 10-year Treasury, the spread is 433 basis points to the positive. That means your yield on the AMZ is 433 basis points higher. The normal relationship between those two is about 300 basis points. That's a 10-year average. So built into that yield of MLP stocks is, I mean, you might call it risk or concern that interest rates rise. So in other words, you're getting paid, in a much bigger way for that risk of higher rates in MLPs than you are in any fixed income instrument, because of that spread being so positive. That really offsets a lot of the concern about higher interest rates. The second part of the answer is, if the 10-year stays below, say, 3.5% to 4%, I think you've got protection here because of that big spread. So unless rates really, really take off, I'm not that concerned about higher rates here over at least the medium term.
All right, Jim Carroll, Managing Director and Co-Portfolio Manager at Point Capital Management. Jim, thank you so much for coming on today. Sorry I couldn't get a hold of you a few minutes earlier, but thanks so much for the MLP analysis, and we will definitely be in touch. Talk to you again soon.
Okay, thank you guys. Have a good weekend.
All right, Joel and Dennis, did you get all that?
Oh yeah.
Were you taking
and
taking
you know
notes?
what, MLP, it's a good, thing and having your portfolio. It's just diversification, like that's what it is. I prefer to use preferred stocks. I mean, you have MLPs as different higher yielding vehicles as well. Consider that all like a hybrid between, a stock and a bond. So, it's good to have diversification in your portfolio. So, I'm a fan of MLPs. I don't know as much about that market as the preferred market. That's why I kind of stick to what I know, and I use the preferreds more for the income portion of my portfolio.
All right, we got 5 minutes before our next guest, Andy Swan. So let's try to cover a couple more earnings stocks if we can.
Well, we got a lot of other stocks to talk about tier two. I just want to talk, this morning here, and it's TOPS earnings. Why is Tops? So you got Top ships here up 47%. And we know some people like to trade these wild child stocks. Had a big move yesterday from 2 to 3. Well, it's a bigger move here today. Call it like mini dry ships move here. $2.20 is where it opened yesterday. It's $4.40. So you got a double from yesterday's open here on TOPS. What is the news on Top ships? Was there news yesterday, or is this just a pure short squeeze again?
They had a 6K out after the close yesterday.
Okay, well, whatever in that 6K maybe is moving the stock, but it gets going in one direction. We see these things from time to time just take off and rally 100%, and that's what you just saw in Tops here over the last 24 hours. Only an 8% short interest. Its float's real small. It's only like 4 million shares outstanding here. Things already traded 440,000 shares, so it's wild here. It's got the other shippers there, the little ones moving here as well. I benefited from dry ships. Actually, Tops was trading up last night. The big move yesterday. I was like, you know what? I'm gonna take some dry ships home, and I did do that. So dry ships, I've actually sold. I actually did good by selling this one. I almost sold the top up at 490. I just have a little small position of it left. DCIX is another one. It's trading up 14% in the pre-market. SINO is trading up 7% in the pre-market. There's like 7 or 8 of these things out there. If the chat knows a few other ones, list them off and we'll mention them. But Tops is your driver here today because it is up 45% here this morning after going up 50% yesterday.
All right, you got down and dirty in the dry ships. Dennis, is that the first time you traded it?
No, I've traded it before with the sympathy moves, but I'm never in dry ships for more than, a day. Like last night, okay, so Tops was trading way up again, up another $1. People might come in and, start. Dry ships is usually your leader, but I was like, it might get some pull up. So I was able to buy some stock last night at 437 after hours, and I was like, up 2 cents. I was like, I'll take the risk. I come in this morning, it's trading 489, and I was talking to you. I was like, should I take some profits here? And I did actually sell some at 490, some 491s, and 492, which is good. It's pulled back here now, and I'm just stuck with a small position left of it, so I'm probably going to sell very soon.
Were you sleeping at the wheel when it went to 573?
When did it do that? I would have been sleeping at the wheel. That was what time was that at?
What time did you get up this morning?
No, but look here, Joel. How long was it up there for? Is that just was it even trading up there that long?
It was it must have been right out. It traded 25,000 shares.
What time was that at?
Right. Well, let me go to my minute chart here. It was.
Because sometimes you get these funky off exchange prints that throw it out. That's why I'm wondering if it was really up there.
Let me see here. Funky off exchange prints. I have. This was it. I bet you it was 607 and 608. Yeah.
Oh, 6 o'clock this morning I was sleeping, so that's when I guess I should have been out there selling it. Should have woke up at 6 a.m. have the dry ships alarm clock there to get out of the position. When that would have been a good one. So I didn't know it went that high. I was selling 490. So when I was waking up at 7 o'clock, I was trading the higher fours.
Okay. All right. Break time. What do we got next?
Final guest of the week, Andy Swan, co-founder of Likefolio. So we'll be right back with Andy. traders and investors to Benzinga's pre-market prep. We're on the line with Andy Swan. He's the co-founder of Likefolio. They measure social sentiment in stocks. Andy, how's it going this morning?
Going very well. How are you guys doing?
We're doing pretty good. I want to get your thoughts, jumping right in on Garmin. I listened to your podcast I think it was last week. You were talking about consumer demand. Garmin reports next, I want to say next Wednesday. What are you seeing in Garmin heading into this latest earnings report and the social sentiment leading up to it?
Yeah. So what we're tracking and what really stuck out to us on Garmin is mentions about actually buying Garmin products. So we call those purchase intent mentions. And in the fourth quarter of 2016, we saw a pretty big drop in those, not only from the third quarter on a quarter-over-quarter basis, but also on a year-over-year basis. So we think that there was not a great quarter in the holiday season for Garmin, and we think that if we were going to lean either way on Garmin earnings, it would definitely be bearish.
I'm looking at the earnings history, 4 straight quarters of earnings beats for Garmin. So this is a short-term play. What you're talking about right now?
Yeah, short-term because not only was it pretty much contained to the fourth quarter in terms of where we saw the problems for Garmin. Since then, from January 1st through basically today, we've actually seen a nice rebound in consumer sentiment, purchase intent stuff. So what we're seeing on Garmin, we think, was pretty isolated to the fourth quarter. So this isn't a short it and kind of walk away kind of thing. This is, if you're going to play the earnings directionally, I would lean bearish. If you're going to put on an option spread, I would give more room to the downside. But this is it's a good opportunity. I like playing earnings plays like this. We can be right 60, 65% of the time and make a good amount of money. So for Garmin, if I'm going to lean, it's going to be to the downside. What we saw from our data was not a great quarter for Garmin.
And then, so can you kind of extrapolate that a little bit further for us? So what you saw indicated just lack of consumer demand?
Yeah, so what we do is we track every brand and product made by every publicly traded company on social media, and we look for mentions that indicate that people are buying or have recently bought that product. And so for Garmin, when we look at specifically those purchase intent mentions, there was a significant drop-off in the fourth quarter of 2016 that was lower than the prior quarter and lower than the prior year's fourth quarter. And so to us, that signals that there might have been something wrong on Main Street during that quarter, less sales, less enthusiasm for the products, and we think that could translate into a disappointing quarter for the company.
Now, are you playing this with options? You shorten the stock. How would you play this?
Yeah, usually what I do is I pretty much play everything with options, especially earnings trades. I want defined risk on every trade that I put out because nobody shoots 100%, and I don't want to lose a lot of money if I'm wrong. And so what I'll probably do is I'll probably sell a vertical spread outside of the money. So I'll probably sell calls just above the stock price the day before earnings. And then I might use the credit from that to buy some puts just out of the money. So I'm going to take a little bit of a swing by, if things go against me, I'm going to lose on both of those positions. But if the stock stays stable, I want to make a little money. And if it goes down, I want to make a lot.
I also want to get your thoughts on Campbell's Soup. They reported earnings, good earnings, mixed earnings, I should say, this morning, and they and guidance as well. So, what are your thoughts on Campbell's Soup, and what are you seeing out of that?
We have Campbell's very different than Garmin. We have a very long-term outlook on Campbell's. It's one of those where they're making they're not making products that like Garmin, where either people are buying or they're not, and that really impacts the company that quarter or in a relatively short time frame. This is more looking at whether or not consumers are shifting away from the brand in their repeat purchases over time. And for Campbell's, we're seeing some indication of that. So we've got a long-term bearish outlook on Campbell's. It's something that, we see the data play out over the course of 12 to 18 months in terms of consumers shifting to another brand or just away from Campbell's brands in general. And so, we have to take that long-term type of view to the stock itself. And, that's one I would lean. I'd be comfortable just shorting the stock at a quantity you're comfortable with and holding for quite a while.
You also worked with TD Ameritrade. You had the Super Bowl ad challenge. Were there any, and where you were tracking the real-time sentiment from companies that were advertising during the Super Bowl? Any particular stocks or notable reaction that you saw in stocks in the days or since the Super Bowl?
Yeah, that's a great question. We had a lot of fun tracking which ads were doing the best during the Super Bowl. And so, what came out on top there was Coca-Cola. Audi's ad, which is owned by Volkswagen, did quite well. And so you're right. What we want to do now is start tracking, how consumers are continuing to talk about those brands and the long-term impact of that. And the good news for Coca-Cola is it was number one, during the ad challenge, and it's pretty much held on to that spot in terms of the positivity around Coca-Cola brands is exceptional. The positivity around Pepsi brands is not so exceptional. So I think there's the possibility of a pair trade there. I also think that, Coca-Cola is just one of those kind of iconic brands, and when things are clicking for them from a brand perspective, it really does translate into sales and into increased revenue reports. So I really like Coca-Cola here. I think that they're kind of doing all the right things, shipping all the right products, and consumers are reacting in a very positive way.
Andy, I think you were the tallest person at the 2016 Benzinga FinTech Awards. Will we see you there this year?
Oh, yeah, I'm going to be there. I wouldn't miss it. It is one of my actually, I'm going to change that. It is my favorite event of the year in terms of FinTech. Just super high-quality people, great presentations, and, usually we figure out a way to put a little after-party together at the last minute and just have a lot of fun. So I wouldn't miss it. I'm going to be there.
Is there a particular highlight from last year? You guys were up for an award. Is there something what was your favorite part of the event last year?
Besides it.
Well, my favorite part
aside from the after party,
when we won the award.
Aside from the after party.
What's that?
Aside from the after party.
Yeah, aside from the after party. No, at the actual event, my favorite part was when we won the award, and I got to go up on stage with a bottle of Pappy Van Winkle bourbon and tell everybody how great the bourbon was that I was drinking.
Right.
And really, I think that, but really, I don't like picking out a favorite part because actually I like the whole flow of the whole thing. You've got, all these great FinTech booths set up where you can actually go talk to actual founders and actually talk to entrepreneurs who are in the industry and kind of see what's coming next and talk through those things, kind of figure out who's winning, who's losing. And then the presentations on stage are great and the awards are great. So, TD Ameritrade sponsors the bar, which makes everything really easy for everybody and a lot more fun. So I think, it's just a total, it's kind of a day of winning.
Dave winning. I think we're gonna copyright that. Andy Swan, he's the co-founder of Likefolio. You can check out his site. It's Likefolio, FOLIO.com. Andy, thanks so much for joining us today, and I'll see you on May 11th in New York City.
All right, guys.
All right.
Finish the week strong.
We'll try, as always. All right, 8:55 now. 5 more minutes left in the week. We didn't really get Ratings land today, and a couple of stocks or a couple of ratings that Dennis and I saw that jumped out to us this morning. We had Capital One upgraded by Goldman Sachs, and we had Macy's upgraded by Atlantic Equities. Those were the only two that really jumped out to me. What about you, Dennis?
A couple other ones. Analyst Jason Price on CAR was downgraded. Credit Suisse, they also downgraded Hertz, HT, Zebra. There really wasn't that much though. It was actually quiet from
what about Piper's downgrade of BBW, Build a Bear Workshop?
a little, yeah. So Build a Bear. Like then we were talking the pre-market show. Is this not the craziest business model though? So let's just stop and think. When they were creating Build a Bear in the first place, I got this great idea. We're going to create a store where the kids can come in and build their own bears, and we'll charge them like $25 to build the bear, and they'll love building the bear, and they'll stuff it and they'll do it all themselves, and it'll be awesome. I look at this though from an outside perspective, and I say, well, you're going to charge somebody to do the work for you. It seems smart if you can make them do it, and we're going to charge them like 10 times more because you can go to the dollar store and get a bear. So, I mean, you're talking about $1 versus $25. I don't know what they charge you for these bears, but they're crazy. And they were popping up in all the malls, and I was like looking, and they'd be the odd person building a bear, but I'm like, man, this thing just seems insane to me. And I remember saying that years ago, and I wish I would have been shorting it. I actually went all the way up to $21, so I guess, it hasn't really done that bad considering because it's still at $9, but build a bear. Who's building their own bear?
Still at $9. It was $23 in 2015.
Yeah, but I would think with this business model, this would be at zero. But I don't know. Maybe it works. I guess, it's kind of the experience of going in and building a bear with your kid. Maybe I would do it with Spencer. I don't know. But I'd rather just prefer to go to the dollar store and buy Spencer a $1 teddy bear as opposed to spending $20 on building a teddy bear. But let us know, chat, if you've taken
$20. $20.
I don't know how much they are. I'm guessing.
Okay. Well,
I don't know. It's up. Pure guess, but I guarantee
over.
You're going through the whole process. You're not going to get it for under $20.
It's
probably.
Over. Yeah, I think.
You think it's more?
I think I've dumped $30 or $40 there a few times.
Have you went to Build a Bear before?
Oh, 2 for $35. Oh yeah, when the girls were younger, yeah, you had to go. But
you built a bear when you were. Wait a second. No, you're a kid. How long has Build a Bear been out there?
A while. I went like 15 years ago.
Oh, I didn't know they've been out there that long.
I mean,
well, maybe I take everything back.
Dennis,
the business model must have worked.
Dennis, it's when something IPOs, that's not when it starts being a company. Okay?
True. Good point.
All right. It popped 3 months after its IPO and made an all-time high at $22
when everybody in the whole world, we were in a bear market maybe back then, so everybody had to build bears.
$36.95 as I have is the all-time high.
So on the online store they charge like $20 to $30 per bear, but as far as the
wait a second,
I'm not
so
done.
you can buy these bears online. That's no fun though. You can't build your bear.
I'm getting there. You can have have a party there. The party packages range from $18 a guest to $45 per guest. I'm not really sure what the $45 gets you. That's so special, but
$45 bear. It gets you the bear,
and some pizza maybe. I don't know.
All right,
bear and pizza.
Let's talk air gas real quick. Bob Wire.
I like beer and pizza, not bear and pizza. I pay $45 for beer and pizza.
In syrup.
It's syrup. You got to throw the Canadian joke out there just because we're going on the 3-day weekend. Okay.
All right. Air gas. Who recommended air gas on our show? Can you remember? I can't. I don't know. Bob Wire's been asking me about it, but this is getting a little pop here. AIRG. Let's just look at it. It seems like someone has a little opinion here.
Is it air gas or air gain?
Air gain.
Air gain. Okay. Air gain. Whatever. Is there an air gas too? All right, $17, right where we're trading. Well, it got up to $16.89. I see in the pre-market. Bunch of highs just above 17 if you're trading this thinly traded issue. All right, $8.59.
Well, we got to talk. It's option expiration.
Okay,
so we'll hold it for another minute because it's option expiration here. We know the imbalances are wild on this day. The open can sometimes be wild as well, as institutional money managers are jockeying their option positions against the equities here. Seeing a lot of sell imbalances here this morning, not surprising with the market trading down. Again, when you have an option expiration, this is the monthly option expiration, these opens can be kind of wild and volatile here. Bank of America, $2 million to sell. Citigroup, $336,000 to sell. A little bit of profit taking maybe in some of your financials. Your food stocks look like they're going to be under major pressure here today. Kroger, $189,000 to sell. GIS, $117,000 to sell. Kellogg, $50,000 to sell. Also looking UNH, which is another one that was getting the beats last night. I didn't see what the headline here is, but we did have a disappointing report from Molina Healthcare yesterday. Now you're seeing UNH trade down 5 points here in the pre-market. There's 207,000 shares to sell in UNH. That could drag down the other healthcare providers here as well. Aetna, think about Anthem, think about Humana, HUM, think about CI. All those mergers aren't going through here anymore. UNH is trading down the pre-market, though.
UNH could be, there's an article in the Times, they're accused of overcharging Medicare by hundreds of millions of dollars.
I think that's it, Spencer. So, and obviously UNH is under some pressure here this morning. So keep an eye on your healthcare providers. That looks to be a 1 weak sector.
All right, I think we got through it. I think we got through the day.
Somehow.
We got through the week. Looking ahead to next week's slate of guests. So no show Monday. We got Nick Shaheen and Rod Casilli on Tuesday. Mark Yusko. We love having Mark on the show. He's on Wednesday. Also, we will probably play that day an interview we did with Monish Pabre, the famous investor, on Wednesday as well. And then we have Todd Gordon. Key to Options, they're a fintech firm. Brian Cheney from TipRank. So a lot of great guests on the docket for next week. If you missed any part of today's show or any of our shows in the past, catch all of them on iTunes and SoundCloud or Stitcher, or you can go to YouTube and play them. Play today's show right now if you want. So please remember that all the information, material, and content is for informational purposes only and not meant to be investing advice. Joel, any last words before we go for the week?
Keeping an eye on the potential double bottom. 36.75 was yesterday's low. 36.50 low in the pre-market. That is the key to the market today.
All right. That's it for us for the week. Have a nice long weekend. We'll be back with you folks on Tuesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.